Friends, welcome to our today's session. Previous class, we have initiated the discussion on registration process under GST law, how a person can get himself registered. We'll continue our discussion on this. First, we'll quickly recapitulate what we have learned in our earlier class. Then some new concepts we are going to learn. Going to share the screen with you right now. In the previous session, in fact, we are discussing about this concept, persons who are liable for registration. That discussion is not complete. We'll be discussing that thing. Once again, let us recapitulate first of all, who are the persons liable for registration. First of all, for that thing, we have to visit the section 22 of CGST Act. So, and if you have remembered, certain relevant sections you have already discussed and connected subsections also. So first, let us see subsection 1 of section 22. Every supplier shall be liable to be registered under this act in the state or union territory other than special category states from where he makes taxable supply of goods and services or both if his aggregate turnover in a financial year exceeds 20 lakh rupees. So this is the primary condition. If the aggregate turnover in the financial year exceeds 20 lakh rupees, that the person is liable to be registered in the state or union territory. Okay, and this is other than the special category states. Okay, this is the basic provision. Now, second point talks about where such person makes taxable supplies of goods and services or both from any special category states, he shall be liable to be registered if his aggregate turnover in the financial year exceeds 10 lakh rupees. That means for other states, primary condition is that 20 lakh rupees should be the aggregate turnover. And for special category states, 10 lakh rupees. Okay, this is the primary condition we have discussed. And then also we know that the central government, right, that the government be at the request of special category state or on the recommendation of the GST Council can enhance the aggregate turnover referred to in the first provision from 10 lakh rupees to such amount not exceeding 20 lakh rupees and subject to such conditions and limitations as may be so notified. That means this proviso talks about that this 10 lakh rupees, which is meant for special category states, this can be increased to 20 lakh rupees, can be enhanced to 20 lakh rupees. Government may enhance. Okay. Is it clear to you? Yes or no? Now, friends, further, provided also that government may, at the request of state or on recommendation of the council, enhance the aggregate turnover from 20 lakh rupees to such amount not exceeding 40 lakh rupees in case supplier who is engaged exclusively for supply of goods subject to such conditions and limitations as may be notified. That means, friends, if you refer to the previous slide, that the aggregate turnover limit was 20 lakh rupees. But here, central government has power. This point says that this 20 lakh rupees can be increased to 40 lakh rupees, but only with respect to supply of goods. Are you getting it? And again, there is an explanation to this provision. For the purpose of this subsection, a person shall be considered to be engaged exclusively in the supply of goods, even if he is engaged in exempt supply of services. That means if he is engaged some kind of services and they are exempted, okay, then also it can be considered as only supply of goods. But there is a condition. These services should be provided by way of extending deposits, loans and advances insofar as the consideration is represented by way of interest and discount. Try to understand this particular paragraph. So here you see first proviso what is saying that 20 lakh rupees limit can be enhanced to 40 lakh rupees in respect to supply of goods. But let us say someone is providing some services along with supply of goods that can be engaged, that can be exempt. that services can be exempted provided it is a service by way of extending depositor loans and advances. Insofar as the consideration is represented by way of interest or discount. For example, let us say someone is only supplying goods and he is accepting deposits from the customers, or he is accepting advances from the customers. And on that advances or deposits, that person is paying interest or paying some discount or giving some discount. Or he is supplying goods, but he is depositing money with his supplier or paying advances to his supplier. And on that advances and deposit, he is earning some interest or earning some discount. Question is that, will it be treated as supply of services? Answer is no. For the purpose of this registration eligibility, that particular supply will be exempted. That means those kind of supply of services will be exempted and it will be still considered as supply of goods only. This is because this consideration he is receiving for supply of services is represented by way of interest or discount. Are you getting this point or not? First condition, what I have understood, the aggregate turnover limit is how much? 20 lakh rupees. And for special category states, it can be 10 lakh rupees. It is 10 lakh rupees. Then you have understood that 10 lakh rupees can be increased up to 20 lakh rupees. And this 20 lakh rupees is 20 lakh rupees for other than special category states. The 20 lakh rupees can also be increased to 40 lakh rupees only in respect of goods. Okay. And when you say supply of goods only, if someone is providing some other kind of services and for which consideration is received in the form of interest and discount, that service will be exempt. That will be also treated as supply of goods. Are you getting my point?
Yes, sir.
Okay. Now you see. Let us learn this second subsection. First, we are going to learn all these legal provisions. We need to understand these legal provisions. After that, only we will be able to practically see how the registration can be done. Subsection 2, this was also discussed earlier. Every person who, on the date immediately preceding the appointed date, is registered or holds a license under existing law shall be liable to be registered under this act with effect from the appointed date. That means this particular point talks about when the law becomes effective, if someone is having some other kind of registration like service tax registration, VAT registration, they are also required to register themselves under GST. Okay, this provision also we have discussed earlier. Now, third subsection, which was again discussed earlier, where a business is carried on by a taxable person registered under this act is transferred, whether on account of succession or otherwise, to another person as a going concern. That means business is transferred as a going concern by succession or otherwise. The transferee, that means the new owner of the business or the successor, as the case may be, shall be liable to be registered with effect of the date of such transfer or success. So this also we have discussed. When business is getting transferred as a going concern, the transferee or successor, they have to also get themselves registered. That means they are also persons who are liable for registration. They cannot escape the registration process. Subsection 4, which we already know, that in case of transfer pursuant to a scheme of an arrangement or amalgamation, as the case may be, or maybe demerger, when the two companies get amalgamated or two companies get demerged or two companies get merged in pursuant to an order of a high court, tribunal, or otherwise. The transferee, that is a new company, shall be liable to be registered with effect from the date on which the registrar of the company issues a certificate of incorporation, giving effect to such order of the High Court or Tribunal. That means High Court or Tribunal has given order for amalgamation, merger or demerger, and a new company is formed, and ROC has issued a new certificate of incorporation with effect from such date. they are liable to be registered. They have to go for registration under GST law. These are the basic provisions which have understood. Okay. And here one important point is there, or one important term we need to understand is what is aggregate turnover. We have discussed this earlier at the time of when we were learning about the definition. Here again, let us say carefully, aggregate turnover shall include all supplies made by a taxable person, whether on his own account or on behalf of his principal. That means someone is supplying on his own behalf, that will be included. But someone is supplying on behalf of his principal, that means he's supplying as an agent, then also it will be. Okay. Now you have seen that this aggregate turnover limit is different from special category of state. So therefore, we need to understand what are the special category of states. This shall mean the state specified in subclause G of clause 4 of Article 279A of the Constitution. If you refer to this Article 279A 4G of the Constitution, you can find out there are 11 special categories of states. Their names are Arunachal, Assam, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh, and Uttarakhand. Okay, they have some special status. They can be called as special category states. But so far as GST law is concerned, when it says special category of states, we refer to those special category states excluding these states. That means these are the states which has to be excluded. What are the states which have to be excluded? Jammu and Kashmir, Arunachal Pradesh, Assam, Himachal Pradesh, Meghalaya, Sikkim, Uttarakhand. These has to be excluded. So excluding these things, those states which are remaining, that means these are how many states? 7 states. Of course, in between what has happened, all of you are quite aware of. That means this Jammu and Kashmir Reconstruction Act, Reorganization Act or something like this, that was passed in the year 2019. So accordingly, this what was called here as the Jammu and Kashmir state, that has become Union Territory of Jammu and Kashmir and also Union Territory of Ladakh. Okay, so all these things, Union Territory of Jammu and Kashmir and Union Territory of Ladakh, they are also excluded from special category of states for the purpose of GST. Okay, so that means out of this 11 states, if you have understood, I'm excluding this 7. That means how many remain? Can you identify which are the states can be called as special category states under GST law? Now you can understand it is Manipur, then Mizoram, Nagaland, then Tripura. Is it not? So these are the states. Let me show you which are the states under GST law can be called as special category of states. Give me a moment. Yeah, Manipur, Mizoram, Nagaland, and Tripura. These are called the special category states. Okay, now we'll revisit once again about this aggregate turnover. Up to this, is it clear to you? Did you understand what is aggregate turnover? Aggregate turnover includes supplies made on behalf of principals. Okay, and I think you have understood what is the meaning of special category states. Now, friends, now let us talk about registration in the state or union territory. Please appreciate that every supplier of goods or services or both is required to obtain registration in the state or union territory from where he makes taxable supply. If a person is making taxable supply, he is to get himself registered in the state or union territory where he makes taxable supply. If his aggregate turnover exceeds specified threshold limit in a financial year, So it is important to identify this aggregate turnover, and it is also important to understand what is this threshold limit in a financial. So both the things will be learning. Now, as of now means from April 1, 2019, this is the various limits, or you can say these are the specified threshold limit. If you see the last column, it is mentioned here. Basic provisions you have understood. You have also understood that government has power to enhance the limit. And by exercising that power, the government has increased this threshold limit like this. For a normal taxpayer who supplies goods only, and you have understood what is the meaning of goods. When I say goods only means if incidentally he is providing some services and where consideration is received in terms of interest and discount, that will be also regarded as supply of goods. So for a normal taxpayer who is supplying goods only, aggregate turnover increased to 40 lakh rupees. Okay. So if it is exceeding 40 lakh rupees, then GST registration is required. For special category states, and what is the meaning of special category states? You have already understood now. So when you say special category states, we are referring to those 4 states, only 4 states. And for supply of goods only, this aggregate turnover increased to, can you read it? How much?
20 lakhs.
20 lakh rupees. So for goods, for normal state, 40 lakh rupees, and for special category states, 20 lakh rupees. Now, let us come to services. For normal taxpayer, for supply of services, the aggregate turnover is how much? What's the aggregate turnover?
20 lakhs.
20 lakh. So if someone is providing services in a normal state and aggregate turnover is not exceeding 20 lakh, he did not go for GST registration. But he is supplying goods, then he need not register unless the total aggregate turnover exceeds 40 lakh. So for goods, limit is 40 lakh, and for services, limit is 20 lakh. And for special category states, for goods, it is 20 lakh, and for services, it is 10 lakh only. For special category states, for services, for supply of services only, this aggregate annual turnover up to 10 lakhs is excellent. Okay. Are you able to remember this? Now, let us discuss about the concept of aggregate turnover. As you know, aggregate turnover is a crucial parameter for deciding the eligibility of the supplier to avail the benefit of threshold exemption. That means for applicability of this registration, or that means whether registration is required or not, the threshold limit is important, and for which aggregate turnover is important. It's also important for eligibility of composition scheme. What is composition scheme? We'll be understanding that thing also. At this time, let me tell you, composition scheme is a scheme. Suppose a supplier wants to opt that scheme. That means instead of paying regular scheme, you pay opt for composition scheme. If you go for that scheme, what will happen? You will be paying tax at a concessional rate. At a flat rate, you will be paying tax. Okay. But there is one problem. A disadvantage is that he will not be able to avail ITC. He cannot take input tax. Also, he cannot make interstate supplies. So this is meant for, in fact, the small suppliers who are interested, who doesn't want to take ITC, do not want to maintain records for availing ITC. They just want to pay a flat rate on the value of the supplies. So that is meant for them. Anyway, what is composition scheme? We'll be learning that subsequently. But right now, please understand that this aggregate turnover is important for all these things. For deciding whether the registration requirement is applicable or not, and for deciding whether these suppliers are eligible for composition scheme or not. And again, for one more thing, for exercising option to pay tax at a concessional rate. under notification 2/2019 CTR. So here is one more notification where tax can be paid under at a concessional. But there also a limit on aggregate turnover. Therefore, aggregate turnover is relevant for taking decision for all these three areas. Okay, and when you say turnover, so in common parlance, it is for total volume of business. And what is aggregate turnover? We had already discussed it earlier, but once again we'll be discussing it. It is defined in section 2, clause 6 of GST Act. Let us refer to that. What is that aggregate turnover? And if you refer, you can understand it includes all these things. Includes the value of outer supplies, which means the taxable supplies, exempt supplies, exports, and interstate supplies of a person having same path. There might be multiple GST registration numbers, that is possible, but the PAN is same. For the same PAN, if these are the supplies, taxable supplies, exempt supplies, export supplies, interstate supplies, all are included to arrive at the aggregate turnover. But aggregate turnover does not include or it excludes CGST, SGST, UTGST, ITGST, IGST, then cess, all these things are excluded. Then one more thing it is excluded, value of inward supplies on which GST is payable under reverse charge. What is reverse charge? At this stage, let us we need to understand that thing. Have you heard of this? What is reverse charge? So this value of supplies for reverse charge will be excluded. Reverse charge means normally what happens? Let us say you are availing some supply, you are purchasing something. GST is paid by you to the supplier and he is depositing with the government. That is normal. It is the supplier who deposits GST money with the government. Yes. Yes or no? But there are certain situations or certain specific kinds of supplies like good transport agency, provision of legal services, some specific services are there, the specific supplies are there, where it is not the service provider, not the supplier, the recipient in certain situations has to deposit money with the government. So who is going to deposit? Not the supplier, but the recipient. So that is why it is called as a reverse charge. Normal provisions are called as the forward charge, that the supplier is depositing money with the government. But reverse charge means the recipient is depositing money with the government. Okay. So even if you are paying GST on reverse charge basis, okay, but that value of that supply will not be included in aggregate turnover. That is the concept here. So if you look at here, once again, the slide, it says it includes all these things, taxable supplies, exempt supplies, export supplies, interstate supplies under the same part, but excludes all GSTs, cess, and value of inward supplies. Okay, reverse charge is paid, reverse charge GST is paid on inward supplies. Inward supplies on which tax is payable under reverse charge basis. That is to be excluded. Are you getting it? Did you understand up to this? Okay. Now you can look at this slide. You can understand the aggregate turnover, what it includes and what it excludes. On that basis, we'll be arriving at the aggregate turnover and we'll be deciding whether it is exceeding 40 lakh or 20 lakh or 10 lakh as the case may be. Okay. Some part of analysis we have done it earlier. Still, we'll recapitulate it once again. First, let us understand this concept. You know, aggregate turnover excludes the supplies on which tax is payable under reverse charge basis. That means exclude the inward supplies on which tax is payable on reverse charge basis. Okay. So the reverse charge mechanism is referred to as RC. So the aggregate turnover, the value of this RCM, okay, this value of supplies under RCM do not form a part of aggregate turnover. So RCM, what is reverse charge, will be learning separately, but right now you understand certain supplies like supplies made by goods transport agencies, legal services, etc., on which tax in certain situations are payable under reverse charge basis. Okay, so inward supplies under reverse charge basis will not be included in aggregate turnover, but outward supplies under reverse charge will be included because that is supply, outward supply. Let us say you are providing some legal services. That turnover will be included with your aggregate turnover. So outward supplies taxable under reverse charge basis would continue to be a part of aggregate turnover, but inward supplies will not be included. Hope you have understood this. This example we had done earlier. Again, we'll repeat it. So, for example, X Limited paid GST and sitting fees paid to its director for services rendered by them under reverse charge. Now, value of services provided by the directors of X Limited will form a part of aggregate turnover of directors, because for directors that is an outward supply. So that will be included in their aggregate turnover. If that exceeds the threshold limit, they are liable to be registered. But for X Limited, that will not be. Okay. So, for example, GST paid under forward charge turnover is 20 lakh. This 20 lakh rupees will be included. That is a part of aggregate turnover. GST paid under reverse charge of inward supplies. No, that will not be included. So, in this case, the aggregate turnover will be 20 lakh. Okay. Here, in fact, when it says GST paid under forward charge of turnover, this 20 lakh refers to the turnover. This is not the amount of GST. And this also refers to the amount of turnover. Hope you have understood this. And you know, aggregate turnover excludes GST, SGST, GST, GST, and says. So here is an example. Turnover is this much, GST is this much, GST this much. So total amount will be 21 lakh 24,000, but aggregate turnover is only 8 lakh. Now, aggregate turnover includes total turnover of all branches under the same PAN. That means aggregate turnover means turnover on all India basis. PAN India, whatever is the turnover against the same PAN has to be aggregated. For example, a dealer is having two offices, one at Bhubaneswar, another at Vizag, and they are having two different GST registration numbers under same PAN. Okay, in order to determine whether X is liable for registration, both the offices, the turnover of both the offices would be taken into account. And only if the same exceeds the applicable threshold limit, X is liable for registration. For example, turnover of Bhubaneswar office may be 20 lakh, turnover of Vizag office may be 25 lakh. Okay, let us say they are for service supplying goods only, where the threshold limit is 40 lakh. But here aggregate turnover becomes 45. So now you have understood, since the both taken together it is exceeding 40 lakh, this person is liable for registration of the GST. Now, you know, value of goods and services which are exported and interstate supplies are to be included. So value of export goods, services, exempted goods, exempted goods or services, interstate supplies between distinct persons. having same plan is to be included in aggregate turnover. This also you are aware of this example. X Limited in Punjab is engaged in supplying machine oil as well as petrol. Supply of petrol is not liable for GST, but supply of machine oil is liable. In order to determine whether X Limited is liable for registration of turnover, the turnover of both taxable as well as non-taxable services have been taken into account. Taxable supplies plus non-taxable supplies, both has to be taken into account for arriving at the decision whether registration is required or not. Here, for example, machine oil turnover is 20 lakh, export turnover is 5 lakh. Okay, and petrol turnover is 25. If you take all this taken together, it comes to 50 lakh, which is exceeding 40 lakh. Therefore, registration is required. He is liable, X Limited is liable for registration. This is how one will take this. Now, aggregate turnover includes all supplies made by a taxable person, whether on his own account or on behalf of principal. For example, that's a turnover of a farm is 20 lakh rupees, but on behalf of principal, he has made another turnover of 25 lakh. So total taken together is 45 lakh, which is exceeding 40 lakh. Therefore, registration is required. So own turnover as well as principal's turnover, both has to be. Friends, at this point, we need to appreciate one more point. That is, aggregate turnover is different from turnover in a state. Right? So the aggregate turnover is used for determining the threshold limit for eligibility of registration, for requirement of registration, for eligibility of composition scheme, and as well as for opting for concessional rate under notification number 2/2019. For these purposes, aggregate turnover is input. But however, once a person is eligible for composition levy, I was discussing little sometime before that this is the flat rate taxes to pay. Input tax credit cannot be availed if you go for composition scheme, and you cannot make any interstate supplies also. But once you know he is eligible for composition levy, the amount payable under composition levy should be calculated on the turnover of the state. There, the turnover in a state is aggregate turnover is arriving at only for eligibility, but for payment under composition scheme, the turnover in a state is. This concept will be clarified to you when we will be learning the concept of composition scheme, and we will be also learning how to take decision whether one should go for composition scheme or one should go for regular scheme. Composition scheme has some advantages, some disadvantages also there. So an entrepreneur or businessman should be able to take a decision which scheme is better for him. Concession scheme tax are lower, but input cannot be available. Input tax credit cannot be available. So we'll be learning that, and we'll be doing one exercise also, or one project we'll be doing where we'll be applying your knowledge to take a decision which scheme is better for a registered person. Okay. Now, friends, we have understood under section 22(1), rupees 20 lakh for the financial year is the basic turnover limit, and the special category state is 10 lakh is the basic turnover limit, but it has been increased subsequently. It has been increased in some situations. And when I say special category states, and I am referring to these states: Mizoram, Tripura, Manipur, and Nagaland. Okay. Now this 20 lakh, which is applicable for normal states, has increased to 40 lakh for supply of goods, and for supply of services, it is still 20 lakh. Okay. That concept we have discussed. And here is again one more important concept to arrive at the aggregate turnover for threshold limit. Imagine a situation. A person has, let us try to understand this concept part. If the person has place of business in different states of India, one branch in the special category state where threshold limit is 10 lakh, another is a normal state. Now you see, suppose branch 1 is at Bhubaneswar, branch 2 is Bhubaneswar, branch 3 is at Tripura. The threshold limit for registration, how will arrive? Can you give some idea?
So it will be 10 lakh.
It will be 10 lakh. It will be 10 lakh because Tripura is there where registration limit is 10 lakh.
10 lakhs.
Okay. The threshold, if this is the situation, the threshold limit shall be reduced to 10 lakh rupees because one of the state is a special category state. Okay. And this particular notification which has come 7th March 2019 specifies or it exempts any person who is engaged in exclusive supply of goods and whose aggregate turnover in the finance area doesn't exceed 40 lakh rupees from registration requirement. So this is for a normal state where the people are, where the supplier is supplying goods only and the aggregate turnover doesn't exceed 40 lakh rupees, he need not go for registration. He may, if at all he is going, he may go for voluntary basis. But when that is a normal provision, there are certain exceptions to this. Exception to the exemption of 40 lakh rupees. So normal provision is that at a normal state, then one need not go for registration if he is supplying goods only and if his turnover is up to 40 lakh, he need not go for registration. But there are certain exceptions to that. What are these exceptions? We'll be learning now. If these are the cases, that then what will happen? Even if his aggregate turnover doesn't exceed 40 lakh rupees, he has to go for registration. Okay, here are some list of cases. You can see it. So friends, we'll do one thing. Let us take a break right now. Then we'll continue from this point in our next session. Okay. Right. Hope things are clear to you. Thank you very much. We'll catch up in the next session. Thanks a lot.